Welcome everyone to the Armchair Traders podcast, our weekly podcast. At least we're trying to keep it as weekly as we can. This week we are talking about the oil sector, and specifically we are discussing PetroTal. We have the CEO Manolo Zúñiga on the actual podcast today to give us the lowdown on PetroTal, what they're up to in South America. Welcome to the podcast, Manolo.
Thank you, Stuart. It's a pleasure to be here with you.
So, PetroTal, can you give us a quick overview of the company, what it does?
Yes, PetroTal is an oil company that operates a large oil field in the Amazon jungle of Peru. It was set up 6 years ago when we became public in the TSX, and now we trade in the TSX, in the AIM in London, as well as the OTC in New York. The company has become very quickly the largest crude oil producer in Peru with 20,000 barrels of oil per day. And it was set up under the concept that the oil field was going to grow through time. We have tripled the size since day one, and it was going to be a free cash flow machine that would allow us to pay dividends to our investors, return of capital. And we did that starting after only 2 years. We had to stop because of the pandemic, but now we're a debt-free company paying dividends all of 2023, and we intend to continue doing that.
And when we think of Peru, I mean, certainly our experience with covering companies, resources companies in Peru, has been that most of them tend to be miners. We've not come across a oil company from Peru before on this podcast. Is it a friendly jurisdiction for oil explorers like yourselves, oil companies like yourselves? And how big is the oil sector there in Peru?
You know, the oil sector was at one point quite large. Peru used to produce more than 200,000 barrels of oil per day. Nowadays, on crude oil, is about 40. We produce half of that, 40,000 barrels of oil per day. It does produce quite a bit of gas, about 1.2 BCF of gas, another 90,000 of condensate. So all combined, about 350,000 BOE per day, give or take. And of course, as you know, Peru is a mining country. It's always been, and I imagine always will be, in the top 5 in gold, silver, and you name it. But on crude oil, it has a very large potential where there's been quite a bit of exploration in Venezuela, Colombia, Ecuador. There has not been as much in Peru, especially in the Marañón Basin where we are located. We're located in the Block 95. It's a very large block. It's about 120 kilometers north to south. We are at the northern tip of that block. The field now, we just certified reserves year-end 2023 of 100 million barrels of oil. And we have already produced 17 million. And we believe that in that block, we may have another 4 Bretañas. So you put it all together, we could be talking about 500 million barrels of reserves just from one block. So we need to continue working hard to let people know about Peru. Of course, let them know about PetroTal, who has been executing almost flawlessly since then. Now, from a friendly point of view, something that is well known is that Peru doesn't change the rules of the game. Once you sign a contract, every term is grandfather, especially royalties, income tax, municipality taxes. They don't touch that. Now, we need to keep in mind that Peru is a poor country, so you have social issues, and of course, permitting also takes a lot of time. They have gone to extremes to make sure that everything is well taken care of. Therefore, the permits take extra time. But once you manage all of that, you are safe, in a country that will respect contracts.
And can you give us a quick summary of your sort of you mentioned Block 95? That's your primary asset? Do you have anything else as well, or is it mainly
We,
focused
we,
on
we
that?
have we have 2 blocks in Peru. Block 95 that I sort of giving you a clue of the short term and long term is a field with 100 million barrels of reserves. We just produced 17. So there's a lot of oil to be developed. We're about halfway on the development. From a short-term point of view, is to continue developing, maximizing the value. We've been optimizing things consistently. For example, at one time, we decided to use our own crude oil to generate power. That alone added $100 million on the net present value of the project. Keep in mind that our crude oil is 19 API gravity, but less than 0.5% sulfur, no heavy metals. I call it a clean oil per se. And it's actually large companies would like to have it for their refineries. We sell the oil at Brent, sometimes Brent minus or plus 5%, depending on demand, which is not bad at all for a 19 API gravity oil. On the long term, we have another block 107, that I'm trying to get permit to be able to drill it or bring a partner. And we continue to scout possibilities inside Peru, and on a more longer term, see if we can do something to diversify the company. But the main focus right now is to continue generating cash flow and giving money back to investors for the next years to come.
And I mean, looking at the map, it seems like you're operating in quite a relatively remote part of the world. Has that required you to invest a lot in infrastructure of the project? And how much progress have you made with that, and how important has that been?
That's an excellent question, because even though we're in the middle of the Amazon jungle, when we're adjacent to the Ucayali River, in that area is known as the Puñagua Channel, that when eventually joins the Marañón River, forms the mighty Amazon River that goes all the way to Atlantic. The all of the investments that we have on facilities, we will have to do it if we were in the middle of the Amazon jungle or in Colombia or in the US, because this is your typical aquifer support oil field. The Vivian formation, which is the producing formation, is highly permeable, supported by a strong aquifer. So you're going to be producing a lot of fluids. Each one of the wells, on average, come in at about 10,000 barrels of fluid per day. We put electrosubmersible pumps. Initially, it's all oil, but the aquifer eventually will bring the water in. So you're going to be managing quite a bit of fluids. So from day one, I've been telling investors, we are actually setting up a plant, a processing plant to process fluids. The larger the plant, the more efficient it becomes, because now you have the critical mass. Initially, when we started the company, on the 2P, proof and probable, we only had 12 wells. Right now, in the latest certification, on the proof and probable, we have 32 wells. So initially, if each well will produce 10,000 barrels of fluid, you'll be managing 120,000 barrels of fluid per day. So you needed to have all of the pumps to lift the fluids, and then process the fluids, separate the oil from the water, treat the water, and then put it back into the reservoir as mandated by law. Because in the old times, they used to dispose it in the Amazon rivers, which we're not allowed to do that anymore, as you can imagine. Now we have 32 wells, which means we're going to be managing eventually 320,000 barrels of fluid per day. That requires more pumps, more processing equipment. So we scale up as we drill wells. We always drill proof locations, and we step up as a step at a time, very carefully, very safely, until we're going to decide that that's enough. We have done enough, but I'm hopeful that we can eventually process 300,000 barrels of fluid per day, because at 5% oil cut, you're producing 15,000 barrels of oil per day, which is why in our presentations we showcase, the long plateau. So once we're done with the capex, which we expect to be done by the next 2 3 years, is just free cash flow for years to come. But even during this time of investments, we are free cash flowing as well, which is allowing us to pay dividends and do buybacks for our investors.
And so basically, I mean, would you say that it's actually makes your life a little bit easier operating an oil company in an area where there's a lot of water, as opposed to someone who's, for example, drilling in a desert or something like that?
The aquifer support fields are the ones that have the highest recoveries. You don't have to worry about doing a water injection project in the future, known as secondary recovery or tertiary recovery, Mother Nature is taking care of that for you. It provides all of the energy that you need. The only job you have to do is, lift the fluids and separate them, and then put the formation water back into the reservoir. That's all you have to do. As simple as that.
And can you give us a bit more detail on what your current drilling schedule looks like for this year?
Well, we completed a well early in the year that we started last year, and now we're actually getting ready to complete the first of the three oil wells planned for this year. So we intend to drill then two additional wells. That will take us to about mid-year. We may do some rig maintenance at that time. Depending on oil prices, we may decide to go ahead and drill a water disposal well. But we're still waiting to see how things shape up. Which showcases also the flexibility that we have to manage our capex. Depending on oil prices, we can invest or not. And the reason for that is that these wells, as I mentioned, come in very strong. So they pay out in 2, 3 months. So you need to pay attention to oil prices to make sure that we can recoup our investment. These wells cost between $12 million and $15 million. And amazingly, we recoup the investment in between 1 to 3 months. So we have a lot of flexibility, as you can imagine.
You've actually mentioned several times while we've been talking about share buybacks, paying dividends, actually how cash rich the business is. Can you tell listeners a little bit more about that and what your cash flow looks like?
Yes, we finished the year with $90 million, and this year we're doing our typical capex program for the Bretaña oil field. We have two other extraordinary projects that are outside Bretaña, or outside the typical development. One is an erosion control project that is only a 1 year project, and then we're doing seismic, 2D seismic on Block 95 to see if we do indeed have two, three, four Bretañas more. But otherwise, if you look at slide 10 in our presentations, you can see that based on our budgeted Brent price of $77, at 17,000 barrels of oil per day, which is our guidance for this year, we should have free cash flow of $55 million. So this is truly a free cash flow machine, for years to come, and that's the beauty. Of course, our goal is to have a plateau between 20 and 25,000 barrels per day. So you look at that same slide, let's say at 23,000, and oil at $80, to make it simple, free cash flow is $123 million. So our corporate presentations provide a lot of detail. You can actually do a full model based on the data we provide you, and give you a sense that organically the company can not only continue giving money back to investors, but also do some of those extra projects to continue growing the company organically in Block 95. And we will see if we can tackle also Block 107.
Going back to the logistics side of things, how easy is it to ship the product out of the area, and does that affect the sort of eventual cost of production as well?
Well, we depend on the rivers. The rivers are key for us. As I mentioned, we're adjacent to the Punyahua Channel, so everything is moved by barge. In the old times, we used to take it to the oil pipeline that will take it across the Andes to the port of Iowa. Unfortunately, that pipe has not worked for the last couple of years. Fortunately for us, and as we are always trying to optimize things, we decided to try the route via the Brazil. So we have a trading company that buys the oil FOB Bretaña, and then they barge it all the way to Manaus. Amazingly, we have been able to optimize that route. We started sending initially 140,000 in the month of December of 2020. Now we've been doing close to 600,000 barrels per month, and it's very much dependent on the river. We also sell to Iquitos, which is nearby to us, is the market that it has the best netbacks for us. We're looking into going into even Ecuador to tap into the OCP pipeline, or the heavy oil pipeline of Ecuador, as another route. So the more routes we have, the more flexibility in case something happens with one market, we have other markets. That's the key we're doing. And the reflection of the dependence on the river, if you go to the slide 9 of our presentation, you see a chart that showcases how we have grown production on a yearly basis and consistently. And it shows you also the expected production for 2024 on a quarterly basis. And you can see that on third quarter, we're expecting a reduction in production because it's the dry season. And at that time, we cannot fill the barges completely. So we fill them up to halfway or, something like that. Fortunately, now we have a very large barge fleet, uh, almost 2 million barrels, and we've been optimizing the process. So, which is why we have been able to guide for 20% more production than the prior year.
And would you say I mean, the share price has certainly been trending up since the summer. Would you say that's been driven by the actual oil price itself, or more because of the cash dynamics you've been talking about already in reference to the company?
I believe it's because the way we have delivered, and we always do what we promise. And for example, when we obtained the $100 million bonds almost 3 years ago, and which they had a 3 year term, we promised investors that we will pay it down in 2 years, so we could go back to paying dividends, and that's exactly what we did. And I believe the us complying with what we promised has allowed us to double our EV over EBITDA ratio from 1 to 2.2 nowadays. That's a reflection of the investors telling us, good job, and of course we want to continue increasing that multiple to 3 or 4, and it's going to take some time. Oil prices actually have dampened a lot of the oil share prices in the industry. As you have seen, there's expectation that oil prices may drop some. West Texas has been bordering $70, and that's why our budget was set for 77. For every $3 extra, we increase our free cash flow by $10 million. So, I believe that if oil prices start going up again, our share price will go up as well, given how we have executed and done what we promised.
Gotcha. And the oil sector in South America, when it comes to sustainability as well, because obviously you've mentioned that you are operating in Peru, but in the Amazon basin. How important is this issue for you as a company, and how are you addressing your impact on the environment?
Well, it's extremely important. We are adjacent to the Pacayas and Media Natural Reserve, the second largest natural reserve in Peru. So, as you can imagine, we have to not only follow ESG guidelines, but we have to lead on ESG guidelines. The institute that manages the park, they love the company. They see how creative we are. Of all of the support, we have been able to rescue some of the species that were going down. So they love what we do. From a social point of view, of course, we have in our area of influence 18 communities of both indigenous and mixed race people. We're very committed to empowering them. We have been working very closely with the government, trying to, and we have accomplished a proper distribution of the canon, as they call it, which is the way the government sends money back to the communities. And we have set up our own social trust fund, equivalent to 2.5% of the value of the fiscalized production. All of that to allow them to become empowered and taking care of their own future, not dependent on the government or the company for that matter. So truly, on ESG, we do lead. On the G side, we have, working with the local communities to make sure that they manage all of this funding that they're going to be receiving, to showcase how it is done. We allow them to actually, a representative of the community to come into the camp to supervise the operations. That we have nothing to hide, and actually that allow us to win a prize by the Ministry of Energy and Mines, because they could not believe a company could be so transparent. But you can see it in our corporate presentations, the amount of information that we provide. I'm always very proud. We have nothing to hide. And that's what we do, and just to showcase to the local people how things need to be done.
So it's fair to say, for those sort of investors who are not familiar with Peru, the government there is very strict about regulating resources companies, particularly in these areas with fragile environment.
Indeed, in Peru, and unfortunately, only half of the economy is formal. So the authorities pay a lot of attention to the formal companies like PetroTal that pay taxes and everything, and instead of paying more attention to the other half that don't pay any taxes. But that's where we are, and for us, it's okay because we're used to having that type of scrutiny. Because as a public company, we have to do that to protect all of the shareholders, all of the stakeholders of the company.
And so, just in summary, before we let you go, I know there's some stuff you probably can't talk about, but what can investors expect from the company over the course of the next 12 to 18 months?
Well, something that when we started the company, we had a proof and probable reserves of 37.5 million barrels. With now, as I mentioned, we have 100 million. We have already produced 17 million. So the ultimate recovery now is estimated at 117 million, basically triple the size of the field. And I'm expecting, as a petroleum engineer, that we should be able to continue doing that. So there's still a lot more oil that can come out of Bretaña. And then with the seismic program that we're going to be doing, starting in the third quarter of this year, it's going to take about a year to do the whole survey. But I'm looking forward in 12, 18 months from now, showcasing that we indeed have other prospects to drill, which then can replicate what we have accomplished in Bretaña. And then you can imagine then what PetroTal will be if we are able to do that. So that's our intent for the next 18 months, giving you good news in all fronts, and continue paying, doing the capital return to investors.
Fantastic. Well, we'll look forward to hearing more from the company as and when you're able to advertise that. But thank you very much indeed for coming on the podcast this evening, my time, and lunchtime, your time, Manolo.
Well, thank you so much, Stuart. My pleasure. Thank you.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.